You trade options, you're going to want to see this. The SPY is looking extremely interesting today. I'm jumping in a quick 3 to 5 minutes. I'm going to give you exactly what I'm looking at on the chart and exactly how I'm going to trade the SPY this week. So let's get into it. Excuse my voice. I'm tired and I've talked a lot today, but I felt like you had to see this. So we are definitely trading range bound. We pushed against resistance. Remember on the Sunday live option stream, we mapped this price range out, bottom side 378 and change, top side I think that is, 394. So it played into our range perfectly. Again, this was Sunday, so we were right in between here when we were mapping this out. We touched the bottom here at 378. We touched the top here at 394. The way to understand this, if you are new to options, is this. This is the floor of the price. This is the ceiling of the price when we're in this house, right? That's how we need to understand this, because at the end of the day, we need to take range-bound trades with a defined time limit so that we can make money all the time. Bitcoin just went over 24.5, which is what we're looking at for bullish breakout. That might be happening. We could talk about that too. So, ton of volume came in from buyers. People found out that, hey, this SVB bank thing might not be as bad as we thought. Maybe we don't have to have as much fear and pressure in the market. So, what does that mean? Well, nobody knows. But what we can do is trade the chart. And we do know that right now, this candle did not look great, although it may signify reversal. And we did see the volume come in, as we always talk about. A change in volume always precedes a change in price. So what does that tell us? It tells us that right now we have a pivotal moment where if this breaks out over 394, we could see a nice bullish trend over the next couple of weeks. Again, we are on the daily chart here, and we want to zoom in and take a closer look at it. So change in volume precedes a change in price, which tells us that we could see strong bullish momentum if we are able to break over 394. Again, that's the price ceiling. We need to see that break so that we can set that as the new price floor. If we can set that as the new price floor, then we can continue to trade upside. And once we hit the ceiling there, we trade downside. So I like to keep my charts simple. Ignore this line. We'll get rid of it. If you're new to trading, I would highly recommend having no more than 3 lines drawn on your chart at any given time. Why? Because it gets way too convoluted and confusing, and there's not much you really need to know. Surprise is not that complicated. So we have a resistance drawn ascending here, ascending resistance, meaning it's going up with the trend. And then we have our 2 horizontal lines drawn here. As we said, this is our price ceiling for right now. This is our price floor for right now. Basically, that's telling us that in the recent trading sessions, the price has not really typically gone lower than this price floor, and we are assuming that that price floor will hold. And what it means in the ceiling, in the context of the ceiling, is that the price has either hit this point and come back down, or we believe that this to be a pretty trustworthy pivot point, wherein the price either hits the top, bounces its head, and comes back down, or breaks through the ceiling and continues up to a new high, if you will. So we've got strong bullish momentum going in through these last 2 days, but not extremely strong. Extremely strong looks like these very strong full-bodied candles where buyers push the price up, which means that if there's no, so this is the wick and this is the body of the candle. We actually want to see a strong full-bodied candle with no wick. If we see that, it means buyers took the price from right here. They pushed it up to here and they held it there, which means they have strength. And as you can see, when we see these strong candles like this, we often see an uptrend that follows for the next couple of days. What we don't see here is that candle. We see strong volume. However, we see buyers push the price all the way to 390, which is good and can signify reversal, but they weren't able to hold it there, closing at about 385.40. However, when we opened on today's trading day, which is the 14th of March, sorry, we saw that buyers opened up at 390. They were able to push it up to 393, but they came down as low as 387. Why is that important? We talked about 387 being a good psychological support that we'd like to see develop over the next couple of days. We see it right here. We see it right here. We see it right here. That's a point of confluence, meaning in the past, that support level has held every time downward pressure came in. So if that support level holds and we continue to see it push up, the key price you're watching is a break over 394. What does that mean and how do I trade it? Well, let me tell you. If we see a strong break over 394, let's go a little closer. Let's zoom in a little more, right? Insane volatility here. If we see on the 30-minute view, right? So that's the 30-minute down here on the chart. You want to go ahead and put the 30-minute view on. That means you're going to get 30-minute candles, meaning those candles measure 30 minutes of trading. So if we see a strong open like this candle right here, again, remember we talked about the body being as full as possible with minimal wick. That means it's a very strong candle, right? If we see an open like this with a very strong candle that sustained its price, I would say that calls are going to pay, and I would aim for 399 because I think that's a good price point to aim for. I think if you sell around 398, you'll make a nice fat and healthy percentage because we've seen a lot of buyers coming in recently, which again, forget the economics of it all. Understand that we need to trade this market and be as agile as possible to maximize our return and minimize our risk. So we're going to do just that. We can see a nice little cup and handle forming here. We got, hopefully this is the handle, and we want to see a nice shoot right off the morning rip. Tomorrow's trading session, we want to see a nice 30-minute candle open up to about 396. I would really like that and feel very comfortable. If we see that, then we're going to trade for the 399 calls. I have to sneeze. No, I don't. Yes, I do. So we want to see that strength. If we see this open strong, right, over this 394 price point, then we can reasonably assume that as long as it's strong, we're going to trade calls to the upside to test 397 and then 399. I like the 397 strike. It's a little safer. You will not see as much of a gain, but you will be protecting yourself a little more. So I do recommend that. For anyone that's new to options, that's a stronger option to consider. If you're willing to take a little more risk and have a little more skill, 399 calls can pay you a little more, but you do take inherently more risk. And the reason I think that we see that strong open over 394 and why that matters is if we look back to the 2nd of March, that trading session, we saw a strong open and then we saw support hold above 394. And then boom, we hit our pivot point right there, spring point, 1400 hours where this just boomed and it tested to size 398.64. So past price action will give us an indication of what could happen in the future. So again, variables, but since we've mapped out the variables, there aren't any. That's what we need to know. There aren't any surprises, excuse me. So if we see that strong open over 394, we're going to trade that to 399. If we see a rejection, meaning the price comes up and hits its head on the ceiling right here, then we should probably look at the 388 puts, which will probably pay pretty handsomely. What I could see happening as well is, look, we tested to size 393 here, meaning we almost hit the ceiling, but not quite, and then we sold off. So if we do the same thing where we almost hit the ceiling or we do hit it and then sell off, we're very likely, in my opinion, to test at least 389. And if we do, those puts will play handsomely, especially if you bought them at 394. That's a $5 move, which means you can see a substantial gain on that contract. Things to watch out for: fake out at open, going down, maybe testing 390 as a support bounce, and then thinking, oh, we're going puts. We're not. We're watching and waiting. We don't want to buy in the middle. Boom, it hits support, and then it rips. You need to be mindful of this stuff. If you don't get the setup you're looking for, then don't trade it. You're not missing anything. Look, we've done this day in, day out, day in, day out. There will be another trade. Just make sure you follow this channel and you'll have access to all that information every time it comes out. So for those of you that are trading this, you know a little bit about what we need to do. I want to put the link here for those of you that don't have it. If you want to check out the Discord, I could put the link in the comments. Make sure you check that out. Feel free to introduce yourself, say what's up so we know who you are as you're watching. We always appreciate that support. Appreciate you guys always. The Discord is free. You get free trading education, free alerts, and etc. That's the only promo I'm going to do, but check it out. It's a great free resource. So basically what we need to do here is watch it open. We want to see a strong 30-minute candle open and close above 394. If we see that and get a support bounce. So if we see this candle, let's draw this out so you guys can understand it. And I want to keep this short so you guys can just take it in, think about it, and then be on with your lives. If we see this come up, right, and then come back down and test for a minute, this would be the opportunity to buy, in my opinion. On that test back down of support right there, that's our opportunity to buy. So it breaks up, which gives us the indication, hey, we need to pay attention. Comes back down and hits support and says, hey, it's time to do something. I would be adding those calls there, and I would set a firm stop loss below that 394, because if it breaks down and there's a bull fake, you don't want to be caught in the middle of that. You want to take your losses and move on with it, and then switch it over to your put contract, which again, we're aiming for about 389. We want to see a support pickup right here, which was not the low of day, but where we found the support pickup on today's trading session. So in short, to summarize, a breakout in the morning, 30-minute candle. We want to see strength. When we come down and test support at 394 and it holds, we are shooting calls. I think 399 is the price to beat. I think we can easily see a nice substantial gain there. If it doesn't hold or it tests the ceiling, let's draw it out. This would be a lot simpler. My goal is to make this as simple as possible for you guys. In the bearish scenario, if we open, we bounce our heads, we test, we don't break through, then we're probably going to come back down to about here. If that happens, that's our bearish scenario. We want to be very alert because then we will be buying the 389 puts right about here. So as you can see on my screen, when we hit this resistance, maybe the second time, that's when I'd say that it'd be smart to start scaling into those put contracts. And this would be your sell point right about 388. If we hit it, I would say start selling at 390 and 389 because that's a safer bet. You want to always make sure you're walking away with more money than you started the trade with. Those are our two scenarios, and they're very important to keep on your chart and be mindful of at all times because this thing's either going to go bullish or bearish. If it sits in the middle, you're going to make no money trading options unless you're selling options, but we're not talking about that. We're talking about trading them. So if that's the case, then that's what you need to do. I hope that helps you map out your plan for the morning. If you have any questions, remember it's a Big Quench on Discord. Feel free to shoot me a message. I'm here to help and answer any questions that I can. I wanted to very quickly look at the Bitcoin chart because I'm a little excited. And oh boy, there is that breakout. We talked about a breakout on the Sunday stream over 24,500. If we can see it close above there on this candle and see continuation, I think we could see strength. Now, I don't like this huge wick here, which tells me that we need to be cautious, right? Crypto is volatile right now. I mean, it's always volatile, but right now, I'd say more than ever, we need to just be very mindful of exactly what we're doing in crypto. But if we see this breakout continue and we see this candle close, and this is the daily candle, if we can see this close above, I don't know, 25K or so, I'd be so above this resistance right here. So if we zoom in, we're looking at about 25,000 and change. If we can see this candle close above 25,000 and change, I would argue that we have a pretty strong chance at testing this range, which puts us at about 28,500. So again, we want to just trade this in sections, right? So those are our price levels we're watching. And here's our overall chart. Just keep an eye on this. On the weekly, we haven't closed above this 24 and change, right? Let's zoom this out. So that'd be, what is that? 24.9. We want to close above 25K because that is our big daddy resistance. That's our 200-day EMA, which is a very important line to understand. That is our exponential moving average over 200 days relative to volume, which means that it is going to tell us bearish or bullish. Follow it, abide by it, trade the chart, trade smart, and make some money. I love y'all, and I hope to stay blessed now.